Alright, welcome to the last milestone of milestone sticks, which is a presentation of this all the overall data. So basically what we're going to do is try to explain to you in this assignment. So in the milestone sticks, we try to do the recommendation. So when we are trying to do a recommendation, we need to come up with support, and we try to do it in a layman term. So as a layman term, Prof always said that the layman term is to do a recommendation based on the normal people, that without any financial background, without any technical background like computer science, so that they could understand what we are trying to do in this assignment. So basically, after go through all these assignments from step 1 to 5, from acquisition of data, management, processing, interpretation and communication, in the last milestone we try to feature out in this how to solve this real world problem, how to make a recommendation for a KLSC stock. So in this assignment, I uploaded all the GitHub source codes in 1 to 3 inside the my own GitHub account. So for this Google link and the YouTube channel, so it's the personal Google Drive and also the YouTube channel I've created for this assignment. So when I submit this assignment, I was like thinking how could I develop a model to actually recommend people to invest for stock. So after some research, actually I found out there's a one value that I've crawled. It's called PE value, price to earning ratio, which is widely used in the stock analysis. It's a tool to tell the investor whether the stock is currently undervalued or overvalued. So how we know that the company's stocks is undervalued or overvalued? So basically you can know from the earnings and the number of shares. So earnings actually is how many money $1 if you invest in the company and churn out how many dollar at the end of the day you will get. So this will be, but in the layman term, is investors return. So if the higher the value is better, it is because it capital earn more money. But then also you need to know if, for example, a company currently is trading at a PE of 20. So the interpretation is that an investor is willing to pay 20 ringgit for its current earning because they look at the future. So PE ratio actually help the investor to determine the market value of the stock based on compared to the company's earning. Okay, so what does it mean? Okay, high PE value means that the price of the stock is relatively high to the earning, possible overvalued. However, a low PE value indicates the stock is currently relative to earning. So example for using the PE, we try to crawl get AirAsia stocks as at 31st of May 2019. So when the company stock closed at 2.89, so that was a few days before that they announced a 90 cents of dividend. So from here you can see the company profit and at fiscal year 31st of March 2019 was 96 million. So it was relatively small, but the number of shares outstanding is 9.6 million. So the PE ratio therefore calculated is 10 times. So investor expectation, which is the high PE suggests the high earning growth in future, which means there will be high earning in future. But then it also translates recently they have issued a 90 cents dividend. Doesn't mean that the retained earning will be lower, but although like that, we can show that in the future the price is actually currently is quite undervalued. So in future there's past historical data that goes up to 3 ringgit something. Okay, but currently we just go back to our objective first, the statement. Okay, how to identify whether AirAsia is a good stock for investment in the long term or short term. So for this, how to predict whether AirAsia is a good stock, undervalued or overvalued. So we try to compare the stock with its peer benchmarking, which is probably Mars Airline, but it couldn't be found because it's currently not anymore. And to implement a machine learning algorithm, so we propose a machine learning to better predict the entry point to purchase this stock and obtain an abnormal gain, which is we call arbitrage. Arbitrage is in a layman term means an extraordinary gain from investing in this stock at which price point. So in previous section we have learned about this to do the decision tree and the linear regression to identify or predict the stock market value. And for this one, we try to implement a recommendation to a user regarding optimal action to achieve our investment objective, which is to achieve higher profit and return on investment. And hence, in this proposal, we define a research title as how to make a good recommendation for investment in stock market through analyzing AirAsia. Then we will try to find out those related stock with AirAsia, how is their performance. If their related performance is good, means we can invest it to the related stock. So it's a co-movement. So this is the background of the company. AirAsia is one of the award-winning company. It's a budget airline. Their vision, mission, and all of their implemented action plan. Okay, this is a summary of the financial information. So as at this period, how much is their revenue, their profit and loss, and what is their net asset. So this is their official company financial report, which I do. And our method is through hypothesis testing. Our now hypothesis will be PE ratio can be effectively determine the stock valuation, either overvalue or undervalue, and PE ratio cannot be determined, which is the alternative hypothesis. So we do a sample collection, and based on the expected result, we expect our strategy is that when the PE ratio is higher or lower than the KLCI PE ratio, then it is recommend to buy or sell. So our strategy one is when it is how we say, when the PE ratio are high, then it will we'll try to sell it. When the PE ratio is lower than the KLCI PE, we will try to buy it. So this modeling and finding we will predict using the SAS. We are able to show the result in the video presentation. But however, there's a limitation in this PE ratio. Compared to other company, it might be different sector, different. So that's why I compare to the peer. Then if the PE ratio is designed is just focus on one strategy, which is there's a lot of things will affect the investment decision. And lastly, last but not least, some company the PE ratio is extraordinary, like those technology stock is very high, but other might be different. So this is what I try to find. So the conclusion is we try to find a generalized way to do this calculation. In order to make this model more successful, we need to fine tune it. Alright, thank you very much.